we could see even bigger moves. We could see a bigger short squeeze. There's still shorts out there in silver, holding and hoping that the market comes down. But there could be an overwhelming amount of physical demand for this commodity that is in scarce supply. You know, Trump declared it as strategic metal, silver.
We're accumulating silver, and I'm expecting at minimum a 20-to-1 ratio of silver to gold, but probably 10, which means you can still outperform gold by about a factor of 7 times. That is huge, especially if gold doubles, triples, quadruples times 7.
Silver has moved decisively into new territory, hovering near record levels as a rare alignment of economic signals and physical market stress reshapes the landscape. Prices holding firmly in the mid-$60 range per ounce are not simply the result of speculative enthusiasm, but reflect a broader shift in how investors are responding to the global backdrop. As expectations grow that U.S. monetary policy will become less restrictive, confidence in yield-driven assets has begun to soften, pushing more capital toward tangible stores of value. In periods like this, silver tends to benefit not only from its monetary characteristics, but also from its growing strategic importance. The macro picture has added powerful momentum to this move. Markets are increasingly anticipating multiple U.S. rate cuts in 2026 after policymakers signaled that borrowing costs may need to fall significantly over time. At the same moment, labor data is flashing warning signs, with unemployment rising to multi-year highs and economic momentum clearly slowing. Peter Schiff has long stressed that this mix of weakening growth and policy easing does not eliminate inflationary pressures, but often masks them temporarily. As real returns erode and purchasing power comes under pressure, investors historically rotate toward metals like silver, viewing them as protection rather than speculation. Beyond monetary forces, silver's supply-demand dynamics are tightening in ways that are difficult to reverse quickly. Industrial consumption is accelerating as solar energy, electric vehicles, artificial intelligence data centers, and advanced electronics expand at a rapid pace, pushing demand to unprecedented levels. Mine supply, meanwhile, has struggled to respond, leaving global inventories increasingly thin and the physical market highly sensitive to incremental demand shifts. Against this backdrop, the recent rally appears less like a short-lived surge and more like an adjustment process, as the market begins to reprice silver for a world where both monetary stress and structural scarcity are reinforcing each other. Now, we present the clips from Peter's interview. Before we continue, please subscribe to our channel and activate the bell icon to receive timely updates. Thank you, and enjoy the video.
We closed last week, I think it was 62. Now, we're off the highs, but as I am recording this, Thursday evening here in Puerto Rico, but silver's above $65.50. I mean, we just broke through 50. Now, if you recall from what I was saying on my podcast, I said that I expected silver to take out 50 because that was the big double top. And that once it did, I thought we would have a quick move up to 100. I didn't think we would hit 100 this year, but I thought we would hit it next year. And we're on track. In fact, it's actually moving up even faster than I thought. Now, I'm not surprised that this is happening. What's actually surprising to me is that it took so long for this to happen. I mean, how long was silver at $30 when gold was 3,000 and higher? In fact, at one point, it was not only 100 to 1, it was like 108 ounces of silver for an ounce of gold. It was extremely absurd. Now it's back, around 65 or something like that. It's still cheap. It's just not as ridiculously cheap as it was. But what's really been happening is silver is just catching up to gold, right? It's taken a long time, but now it's making up that lost ground quickly because gold hasn't really gone anywhere as silver's been rising, but it hasn't gone down. Gold is around 4,330, 50. The key is it's holding. It's not going down. I think what is happening too is people that were long gold and short silver, because that's obviously been a popular trade, that trade is being unwound. And so that means that you have to sell your gold and buy back the silver that you shorted. So that's probably keeping a lid on gold. But gold's not going down because there is still substantial buying of gold beneath the market. So we have very strong support now, above 4,000 for gold. And we're not going to get anywhere near 50 on silver again. I doubt it. I mean, is it possible that we could go back down and retest 50 again? I guess so. But I think the odds are that we're not going to get down there. What's also been a bit surprising, but again, nothing surprises me, is that the mining stocks have gone nowhere this week. They've been steady. Even the silver stocks, even with this explosive move in silver, the silver stocks are not making new highs yet. People are thinking that this is a fluke, right? That, this is just some kind of speculative blow off. And so they're not paying up for these silver stocks. Well, they're going to, because this is not a speculative blow off. This is a long overdue catch up. In fact, one of the places where there isn't a bubble, I mean, there's so many bubbles that have been inflated by the Fed and its loose monetary policy. The one thing that's not in a bubble is gold and silver. It's not even close. It doesn't even have any of the characteristics that would qualify it as a bubble. And so I think that a lot of the money that has kind of been on the sideline this week, kind of watching in disbelief as silver prices have surged, I think you're going to see a delayed reaction in those mining stocks. And I think they're going to soar to new highs before the end of the year. So I would encourage people tomorrow morning, I would be buying more of these stocks, or if you don't own them, buy them, or get into my gold fund, the Euro Pacific Gold Fund, EPGIX. Of course, if you buy that tomorrow, you get filled at the close, right? But that's still going to be okay, because I think the big moves, again, are going to happen next week. Just like, it started, just like I said last week, on Sunday night. Silver gapped up to $3 on Monday. Had a big move, but you had all weekend to buy it. And again, you got to go to Schiff Gold and buy some gold and silver tomorrow, this weekend. Just don't wait till Sunday night, because that's when Asia wakes up and they start buying. You want to buy before they do that, right? And I think with the thin holiday trading next week, we could see even bigger moves. We could see a bigger short squeeze. There's still shorts out there in silver, holding and hoping that the market comes down. But there could be an overwhelming amount of physical demand for this commodity that is in scarce supply. Trump declared it as strategic metal, silver, right? I mean, there's a lot of real industrial use. Big buyers need silver. And there's just not a lot of silver there. That is the problem. Now, it's not a problem for me. I own a bunch of silver. Right? I own a bunch of silver mining companies, right? So do my clients now. But it's a problem for the people who have they've shorted silver that they don't have. And good luck trying to get a hold of it.
What is unfolding in the silver market points to a structural shift rather than a temporary price cycle. And Mike Maloney has highlighted how these signals only become clear once currencies themselves reach critical inflection points. He notes that while short-term correlations between currencies and silver can appear inconsistent, the relationship tightens dramatically after major currency bottoms, when confidence breaks and hard assets begin to reassert their monetary role. Policy moves such as India reducing import duties, Russia allocating funds for critical minerals, and the quiet accumulation of silver by state-level players suggest that silver is no longer being viewed purely as an industrial input, but as a strategic asset within an evolving global settlement system. These actions may look modest in isolation, yet together they signal a gradual repositioning that markets often recognize only after prices have already adjusted. At the same time, Maloney emphasizes that supply constraints make this transition especially powerful. Annual mine production leaves little room for large sovereign purchases without stressing an already tight market, while years of structural deficits have reduced above-ground inventories available to industry and investors. Silver's rising importance in energy, technology, and defense means demand is not cyclical, but embedded in future growth, and new supply cannot be brought online quickly enough to relieve pressure. In this environment, price becomes the only balancing mechanism. As silver increasingly behaves as both money and an indispensable industrial material, the market is being forced to reprice it higher, not out of speculation, but as a consequence of long-term economic reality.
Together, along with what he is proposing, because those things that he just named here did not stop. They were there before. Silver is, gold has been rising for a while. People are concerned about the economy. A lot of this is investors. So silver is starting to act once again like money. People are protecting themselves with it, and they are making gains with it. And the solar panels as a proxy for industry, batteries, I've been driving electric cars now since my first Tesla was a 2010 Roadster. My second was a 2011 Roadster. Then I had the 599th Model S off the line in 2012. And I know electric cars are superior. And I used to give people rides in 2012 and 2013 and saying, you just know in 20 years that 80% of the cars being made are going to be electric. And the people that sort of pulled out of the electric race, the companies, they're going to end up dying. They absolutely are. I'm going to get a lot of flack in the comments from this, but they absolutely are superior. There's just absolutely no comparison. And when I drive an internal combustion vehicle, it feels broken. But the demand that this places on silver is incredible. A worldwide shift to our transportation infrastructure being made up of mostly electric vehicles. This is absolutely enormous, and we do not mine enough silver. And so the fundamental supply-demand imbalance is one of the big drivers here. This fundamental supply-demand imbalance has to drive the silver price, because this has to be corrected, especially with even greater and greater silver consumption in the future. And what we saw is in 2011, silver hit $48, and there was a structural deficit back then. And it persisted for like the next 5 years and then went positive. It takes about, for the mines that already exist, that have been high graded and closed, new prices make the less mineable ore, the ore that has a lower percentage of silver in it and doesn't pay to mine. Sometimes miners will do what's called high grading. You've got a core deposit, and there's less and less silver in the ore as you go away from the core. And they'll do what is economically viable to survive. And that means at low prices, you only mine the highest purity stuff, but you're leaving behind a lot of silver. It's just more costly to refine than you can't make a profit on it. And so they leave that behind. But then silver explodes, and now it's profitable to go back and get it. Those are the mines that can start adding to supply in just a few years. They have to take a mothballed mine and get it back up and running, but it's already been through the permitting process and the Environmental Protection Agency and all of that stuff. And so, but those aren't that many. All of the new prospecting that's going on and finding a claim and turning it into a mine, you're talking 5 to 10 years is like a minimum. And so I'm not expecting to see this to go into surplus until at least 2030. But by then, the demand is going to be growing so quickly, especially with the server centers and the demand for AI. This is going to be growing very quickly. Silver is probably going to remain in a fundamental deficit. So above ground stock, the amount of silver available for industry to buy and investors is going to keep on shrinking and shrinking and shrinking into the early 2030s, most likely. That means the only thing that can set that in balance is price. And so the price has to go up. It's just a fundamental law of economics. And so silver, everything has to obey these laws eventually. They can break the law for a little while, but they always get caught. If you look back at the year 2000, all the bars except the green bars Well, the dark blue bars are also about the same size, or even smaller today. But solar panels, look at the rate of growth there. The rate of growth of electronics and batteries has been slower, but that's going to explode. And we are done with photography shrinking year after year. When digital photography came out, it really wiped out. But don't say in this graph, that green line, even though there's less silver being purchased from the market, there is also less supply, because all of that photography, this is for the negatives. The film stock has silver in it. And I can't remember if there is silver in the developing solution, but all that silver gets recovered and comes back to market. So it was stuck in this loop. So that demand was also supply. That is sort of done now. X-rays had silver in them. That's all been, so like 85% of that photography demand was also supply. It came back labeled as scrap. Point of that is that that's more supply going away. That green line going down isn't just demand going down, but it's supply going down. Jewelry has been a little bit static since 2000. And as price goes up, jewelry and silverware will shrink because it's getting more and more expensive. Well, actually not. People buy gold jewelry. So as silver becomes more prized, there's going to be a lot of silver necklaces and stuff. But I would expect batteries and solar panels and other uses to absolutely explode. So this chart, there is no direction for this chart to go except north.
Looking ahead, expectations for silver remain generally positive, with many observers pointing to a supportive backdrop that could carry prices higher over time. Projections often cluster around the idea that values could push into the $70 to $75 per ounce range by late 2026 if monetary conditions ease and industrial consumption continues to expand. Factors such as potential interest rate reductions, steady demand from energy and technology sectors, and ongoing supply constraints all reinforce the view that silver still has room to reprice upward, even if the journey is not linear. That said, silver's relatively small and less liquid market means price moves are rarely smooth. Compared with gold, silver has a long history of exaggerating trends, often rising faster during rallies and falling harder during corrections. This tendency makes it attractive for those seeking outsized moves, but challenging for those unprepared for volatility. With that in mind, as silver enters a phase of heightened sensitivity to economic and policy shifts, the key question becomes, can investors withstand the swings long enough to benefit from the broader trend? Share your thoughts in the comment section below. If you found this insight useful, make sure to like, share, and spread this update to others watching the silver story unfold. Your support helps keep these deep dive analyses coming.